Hello everyone. In previous lecture, we have seen how companies they record their revenue and other income in profit and loss account with the help of annual report. In this lecture, we will see how company record their expenses and we will see detail about those expenses with the help of notes to accounts. So we have already seen that how company recognize revenue and other income, and we have also covered notes to accounts part of these expenses, right? And we have also taken example of Pune Bakery. We understood that how to prepare P&L account, right? Now, if you see how company recognize their expenses practically, so first line item is given cost of material consumed. I have already told formula that what is the formula for cost of material consumed. So formula is opening stock of raw material plus purchases minus closing stock of raw material, right? So I have given you the logic that why company adds opening stock, why company reduces closing stock. We have already seen this thing, right? When we were doing Pune Bakery example. Again, I will tell you this concept. Just wait for a few minutes. Then after that, we have seen purchase of stock and trade. So I have taken example of Pune Bakery. What Pune Bakery do, they bake their cake, right? Along with baking of cake, what they do, they buy some finished goods. You might be thinking what finished goods they buy. They buy cold, right? They buy Coca-Cola, Thumbs Up, they buy cold drinks, they buy some other Britannia cakes also, right? So this is going to be finished goods, right? So apart from their manufactured product, what company do? Company sell other product also, right? So if company is buying some finished goods of other company, right? So this is going to be purchase of stock in trade, right? So what we are doing, whatever purchases we have made for stock in trade, we will be recording here, right? Another item is change in inventory of finished goods, stock in trade, and work in progress, right? So I have told you that definition of inventory is given in Ind AS 2, right? In Ind AS 2, definition of inventory is provided. So inventory includes raw material, then work in process, it includes finished goods, and it also includes stock in trade, right? It also includes stock in trade. This is what the meaning of inventory, right? So what is the formula for changes in inventory? The formula for changes in inventory is opening stock of inventory, right? We have seen the definition of inventory. So your inventory includes all these line items, right? Inventory includes all these items, that is raw material, WIP, finished goods, SIT, right? So if opening stock of WIP is given, so we will take opening stock of WIP. If opening stock of finished goods given, so we will take opening stock of finished goods and we will reduce from closing stock of finished goods, right? We don't have to consider raw material here. Why we don't have to consider raw material here? We already seen, but again, I'm repeating it again because raw material adjustment I'm giving in of material consumed. So here, if you see, they are not talking about raw material and changes in inventory, right? So you don't confuse. That concept is very easy. Now we will see the notes in some time. So you will get the concept, right? So here inventory, in inventory, they are including only finished goods, stock in trade, and work in progress, not including raw material, because raw material is already included in cost of material consumed. So I told you, let's suppose your dad, he has given you 20 lakh rupees in beginning of the year, and at the end of the year, you are having only 15 lakh rupees in your pocket. So if I ask you that what amount you have spent, so you will say 5 lakh you have spent. How you have calculated? Because opening stock of cash was 20 lakh and closing stock of cash is how much? 15 lakh. So this is how company try to find out the expenditure behind finished goods, stock in trade, reducing closing stock from opening stock, right? So this is the concept behind changes in inventory, right? Now we will see the notes to account and further we will discuss about these line items. So I will write down here cost of material and I will click enter, and here you can see the notes to accounts related to cost of material consumed, right? Here we have seen the formula for cost of material consumed. I have already told you the formula. Quickly what I will do, I will write down the formula. So cost of material consumed formula is opening stock purchases minus closing stock, and same thing they are doing. Raw material, so during the year, the opening stock was how much? 227, right? We are talking about raw material. With the help of raw material, what company do? Company manufactures product. We are not talking about stock in trade. Stock in trade means finished goods which company buy from other companies, right? So raw material for cake is going to be milk, sugar, cocoa powder, and there can be some other raw materials, right? So opening is given, then company has purchases some raw material, and at the end there was a closing stock remaining, right? When we will prepare balance sheet, so I will tell you the adjustment of closing stock. So you just keep in mind that in balance sheet provide the adjustment, right? Then if you see, they are buying packing material also, right? If they are baking cakes, so definitely they are packing material. Without packing material, how they will sell their cakes, right? So they are buying per some hooks, etc. Right? So opening stock of paper hooks is 89 crore rupees. Then they have purchased during the year, and there's a closing stock. So what formula they are using here? Opening stock plus purchases minus closing stock, right? And this is how they have calculated their cost of raw material consumed. So in total, they have consumed this much raw material, and they have shown amount in P&L account. After that, we have discussed about purchase of stock in trade. So purchase of stock in trade, there is no adjustment required or notes to account is required, because whatever amount they are incurring or spending purchase of stock in trade, that can be directly shown. There is no need of additional information. So they have not shown this additional information. After that, we have discussed about changes of inventories, changes in inventories of finished goods, stock in trade, and work in progress. And I have told you the formula. What is the formula? Opening stock of inventory minus closing stock of inventory. And they are doing the same thing here, right? They are doing the same thing here. We will see. You can see the formula. Opening stock of, they have taken opening inventory of finished goods, WIP, and straight, right? And after that, they are reducing closing inventory of finished goods, work in stock in trade, right? That is, this total is given, and what final amount they got here? They got 176.71. Now you might be thinking that why this amount is negative. If the closing stock value is higher, right? If closing stock value is higher as compared to this stock, right, as compared to opening stock, so definitely this figure will be negative, right? So let's suppose I'm taking one example for your understanding. Your dad has given you 20 lakh rupees on 1st April, right? And on 31st March, next year, 31st March, he asked you that how much cash balance you are having. So you have said that you are having 22 lakh rupees, right? 22 lakh rupees with you. It means you have invested this money and you have earned profit of 2 lakh, right? So your dad will be happy. Yeah, that you are having 22 lakh rupees, right? So you can say that during the year, you have earned a profit of 2 lakh rupees, right? So if this figure is negative, it means your closing balance is higher. If you do the total, so you will find that closing balance is higher. And if closing balance is higher, so you are getting benefit, right? You are getting benefit. So if closing balance is higher, so this value will be negative. And we show this amount in expense side, right? If we are showing some negative amount in expense side, definitely it will reduce our expenses, right? What we can do, we can show this amount in sales also in income side. Otherwise, we can show this negative amount in expense side. So in sales income, you will show positive amount 176. Otherwise, you can show in expense side that is negative amount. So what schedule 3 is that you have to show this transaction in expense side only. So that is the reason we will show negative figure. So automatic expenses will reduce, and if expenses will reduce, definitely our profit will increase here, right? So again, what we will do, we will see profit and loss account. So here you can see what company has done. Company has recognized cost of material consumed whose value is 2756, and company has shown changes in inventory, that is 176 negative. Now we will see how they are recording in P&L account. So here you can see we have seen that cost of material consumed value was 276, right? So we have seen the calculation, and after that we have seen changes in inventory, that is negative 176, right? So if I am writing down any negative value in expense, so it will reduce my expense. I will reduce my expense because my closing stock is greater than opening stock. It is equivalent to your dad has given 20 lakh and that time you are having 22 lakh. So it means you have invested in, instead of spending that, you have invested that amount and you have generated some profit. Right? In next lecture, we will be discussing about these expenses, right? Remaining expenses we will be discussing. So stay tuned with us. Thank you.